Let's talk about time. 24/7, 365, every year passes by and we've entered into a new one and we've just wrapped up January. For the month of January, with all kinds of things that happened, the market's actually finished up. But I don't want to talk about all those things. What I want to talk about is perspective of time. And one of the ways you can learn about investing and how to have perspective is to learn what history has to show, because that's the only guide we have to try and understand what the future might hold. And so what I want to show you about time is if we just look at the last 20 years and then think about what any average 1 year could look like, we might frame some perspective of what could happen in 2025 with all the change that's going on. And so I want to look at this little chart and focus on the different categories for a second. And so what this is a chart for the last 20 years of what the average return was over time. That's the little black line. That's your 12% for large cap, 10% for small cap, 8 for emerging markets, 7 for developed. And then notice what the return was for cash, which many people are feeling really comfortable sitting on right now. But then look at what the worst year was in the last 20 years and the best year was. And what I want you to gather from this really quickly is in any 1 year, you may have to tolerate your portfolio dropping 20, 30, 40%. But also for the same opportunity, it may go up 50, 90, 86. In other words, the markets go up and down quite severely on any one calendar year. And that could happen in 2025 because no one knows what the future is going to hold. One of the best ways history shows to build wealth is to tolerate the down that no one likes and don't overreact too much to the up that everyone gets excited about, and realize that that long-term average of 10 to 12%, historically speaking, is one of the best ways to grow wealth. And it's something that we try and apply to our clients. Let's be really concerned about what we need in cash for the next 12 months in case there's a sell-off. Let's be really concerned about what your goals look like to make sure we don't overreact, though, if the markets sell off with our long-term assets that need those rates of return in order to accomplish the goals you have into the future. So let's keep some perspective as the unknown plays itself out 1 month at a time in 2025.